To discuss emerging market bonds, I'm joined by Daniel Tassan-Din of Nutrimenta Finance and Investments. So Daniel, how would you assess the performance of emerging market bonds, particularly within hard currencies?
Yes, especially if you consider August and September, we have seen a 40% widening of spreads in emerging market bonds, moving from 350 basis points to 500 basis points, as you can see from the graph there. And this has resulted, of course, in a negative performance of 4 to 5% for high-yield emerging markets bonds and about 2 to 3% for investment-grade bonds. And of course, the main reasons for this decline is coming from the fact that the market is adjusting to lower world economic growth and lower commodity prices, as the GDP of China is probably going to be lower than the expected 7%. So this is affecting the performance of the asset class. However, one interesting thing is that we have extremes in terms of performances. On the negative side, we have Brazil, which is down 16%, and Colombia down 8%. But on the positive side, we have Russia, which is up 22%, and even Chinese bonds are up about 3% despite the decline in GDP growth.
Right, so where would you be looking for a potential opportunity?
Yes, clearly the fundamentals are deteriorating today in the emerging market environment, but I think that we are now stabilizing at these low levels. So if you consider that now emerging market bonds, corporate bonds are yielding between 8 and 10% on an annualized basis, this more than offset any potential risk of restructuring. So the current level are certainly attractive on a long-term basis. And in particular, if you look at the graph, you can see that one country that we like at the moment is Brazil. Brazil, as mentioned before, is the worst performer year to date. But if you look at what happened to Russia last year, where we had an increase in spreads, which is currently what's happening to Brazil, and then Russia actually was the best performer in 2015. We think that Brazil will probably follow the same pattern in 2016, because mostly the fact that Brazil now has a floating currency, and this has allowed the country to adjust to lower commodity prices. So we think that the economy in Brazil will gradually improve next year, and the country risk will also improve. This on a particular country, but then if you maybe look at the table there are other opportunities now in the emerging market world. For example, we have cable companies in Chile called VTR. We have also short-term Petrobras paper, again from Brazil, oil company from Brazil. We have conglomerates in Indonesia called Tata Capital, and also some telecom company in Russia, like Vimpelcom, that also has activities in Italy. All these samples give you today about 8% return with a relatively low duration of 4 years. So we think those are solid and attractive names as an example of emerging market exposure.
Right, so you've touched already on Brazil and Russia, but investors appear optimistic about India's chances. What do you make of that leading into next year?
From a point of view of hard currency bonds, I think that India today is not very attractive because most of the companies there are yielding between 2 and 4%, except maybe 1 or 2 metal companies like Vedanta that have a particular issue related to commodities. But in general, India paper is not attractive from a yield point of view. Certainly India is doing quite well from an economical point of view, especially because of the infrastructure program and spending that the government is implementing, trying to catch up to where China is today. But I would say all this positive news is already priced in most of the bonds in India.
Okay, Daniel, thank you very much for your insight today.
Thank you very much.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.